Welcome to TradeTheMBI.com. This is John. This report is for the 22nd. Well, the crossover of Magenta continued its move, still pretty weak from a short standpoint. This was just clean profit taking nobody wanted to buy, so you start to get the carry through. Support wise, though, don't see too much of a problem as long as shakeout stays positive. So you need to see that return back up. We're at 2. 76% is not out of range, but doesn't seem particularly likely given the scenario. But that was a strong separation. And we talked about that. That's the strength when it separates broadly, as it did here. You get a significant reaction in the direction that we expect. And it's what happened. It's nothing big. I mean, we're still, from an extreme standpoint, not in an oversold kind of situation. It's still more bullish than not. So if we had flipped to red on that, then you would have been looking at a much deeper decline within that. So, after the strong up move, this normal balancing, plus you're going to get a lot of shorts pumped into it, and that creates your secondary move to the upside from it. But a lot of this was related to how ugly the treasuries were. I guess countries paying tariffs and that just don't want to buy U.S. treasuries, so there's a little toxicity there, not wanting to support the debt move within America, and can't necessarily blame them for that. But it doesn't matter. The treasury just sucks it up via the Fed, and but that rate yield, I mean, how can you be in any other currency when you get that kind of yield from U.S. currency? So there it is from TLT standpoint, and that becomes an interesting one. It's like that's the haven for jumping into a good return, but this is that expectation that they think inflation is going through the roof. So you end up getting your nice 5% yield, and you're not in such bad shape given what we're seeing from oil and that there is no inflationary pressures. So this is all based on what they think is going to happen with the tariff situation and price rises. So if that doesn't materialize, then wow, you've got a big divergence within that. Euro giving back some of its gain, and again, why would you be in the euro? We can get a much better yield from dollar, especially now that you have that extra buying power. And it begs the question. Think about that one from a gold standpoint, continue to rise. And again, this is that same narrative, and it's playing out pretty well. It's convinced a lot of people within it, but Bitcoin and them continue to rally along with it, despite where the Nasdaq went with that. Though we can start to see some climbing short interest in there because it's getting a little frothy from that standpoint, at least in market view. But when we look at it from an ETH, it's behind quite a bit relative to where Bitcoin is in that relative move. From the 50K chart, though, it was always pretty clean. We ended up with the MBI white spike. Magenta didn't quite dip below yellow at that point, so that was the rally rise. But as soon as the MBI white spiked, you dipped below 25, you knew where you were headed to zero. It's not even a question mark in that particular case. And then it followed through because MBI white stayed in the lead all the way through. Just now starting to take over, but it's going to have to do a much stronger move to get past that 23%. Quite a move in the negative. And you can see following the orange, we had a brief dip below the 7.5 that usually creates a little pump, and that did get us back over, but wasn't able to do anything from there, and then respiked right down at the bottom that caused a little pop, and doing it again, which is also creating that. But you can see with the steel not resetting, it's going to have a tough time getting past the 23 or sustaining any move from that. So particularly with the shakeout of this negative range, not super negative. When it was down here, you had a forced pop situation at that minus, well, it was well over 23 at that particular stage. So hard to get that into the screen, but if I lift it up a little bit, you can see there. And resolving normally. So just had a complete reset all the way from the previous run up of the last week. Beautiful from that setup, but of course now you're going to need call buyers coming in to offset all the puts that have been put into the situation, and with a short time period, that would become the typical play from it. We can see that it was pretty clean from that drop off. When we slide forward, this is the chaos that's going on because it's confused a lot of people, which is the exact idea. The market wants to have discontent so that you get motion, and that usually creates it. In this particular case, nothing too dramatic, at least from a broader view. Things are still humming along. However, you're going to have to see some kind of net values coming out of growth and or maintaining of inflation under control. With oil not really moving, you don't have an impetus there, so this just becomes a speculative game at this particular stage. They think it must happen given their Keynesian model, and if it doesn't, then well, that would be certainly a big bonus for the market, that's for sure. As always, though, anything relevant, I'll put it on the team chat. Have a good one. Trade well.